All righty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session. Happy month end and happy quarter end. So it's actually been really slow today. We've seen, so I've been thinking there's some flows that have been happening the last couple of days. It's been really predominantly driving the market. But what we're going to do is we're going to go through all the instruments as we normally do. And let me pull up the bias chart really quick. I don't think there's a whole lot to say going into today other than what I've already said on the F.A.C.E webinar earlier, that, we have to get past today. I mean, today's, no one really wants to put on anything big ahead of today, because there are going to be dominating flows that are going to drive the market. So you just kind of, unless you're there's a huge reason for you to step in and start getting long or short something. I think most people are just going to stand aside and let the flows drive the market price action today. But let's note a couple key levels. And first and foremost, I think the biggest and most important level right now, well, for today in the FX market, is going to be the euro dollar at the 38% retracement. I mean, this is big. As you guys know, I think we're going lower than this, but that doesn't mean that we can't stop here today. And I think this is where you can get some good two-way price action. So when I say that, if you take, oops, that I didn't want to do. Hold on, let me get rid of this. Okay, this is fine. So when you're talking about the euro, I actually think that you can play it on the long side or on the short side today. All right. So the reason why I say that is if we hit, this is an hourly chart. If we hit new lows in the euro, which I think we will, and we go to 116.90, that's the 38% retracement, right? We'll hit a new low, hourly RSI will diverge. You can play it on the long side. Or if it does rally, since relative strength is already divergent anyway, let's just say it does rally. Well, I think if it rallies back to 117.60, it'll give you an opportunity to sell it at a higher level. So you decide what you want to, or how you want to play it, but I think you can play it either direction today. I do think that the trend is bearish, but 116.90 is key support. And I think intraday resistance is 117.60. And I think it's a bearish trend. So if you guys are just waiting for something to do, oops, sorry. My glasses just hit the mic.
Your glasses just hit the 38.2, did they?
It just hit the 38.2. I was sitting there looking at, Adam, and I know he's a different part of Canada. He's like 2 hours ahead of me. And then I was thinking about you guys, and I'm like, man, I just don't like to show my video at like 5 in the morning after I've been up at 3. I mean, I look like you would imagine somebody looks like at 3 o'clock in the morning. I look like that person. So it's hard for me to put myself on camera, which I can.
Blake, no offense, but you look like that all day long.
I do. I really do. If you want to see what I look like, that's it. I mean, I just I think I can do it this way too. Like I don't know if you can see me. Yeah, I guess you can, huh?
Yep.
Yeah, I mean, it's just like I look like, I got my ForexAnalytix hat, but I'm just not very very pretty in the mornings. Anyway, but I looked at Adam with such envy. I'm like, oh, look, his hair's all done, and it looks all nice, and you guys can. Oh, here, hold on. I guess I should do this too. I'm stop that. I realized that my closet's a bit of a disaster back there. All my trading books are piled in on my thing up there. Anyway, neither here nor there. But I did think I should say good morning and hello and wish everybody a good trading session. So anyway, let's get into the charts. Let's get into continue on here. So with the cable, so the cable's pushing up some minor trend line resistance, I think, is right here, and you can see it also coincides. If you take this fib here, coincides with the 38% retracement. So that comes in at basically 138. I think it's minor resistance, but if we get a spike up to that 138 level, it could, give you an opportunity to be on the short side. But you can see 38% retracement, trend line. I think support's going to be pretty key down here at one, well, I guess I'll write down 137 today and then 136.65. Okay. I'm going to keep it in range. Aussie, it's trading really heavy. I know we bounced overnight, but I still look at the Aussie and think, man, this thing is heavy, right? 75.60, I'll have to just write that 75.60 and 76.60. And, I'm going to keep us, I know it hasn't broken down yet, but this is important. And then this would be 76.60, and I'm going to keep it in a bearish trend. Okay. And I know, like I said, I know it hasn't broken down yet, but it's just trading extremely heavy. Or as Adam put it, it's extremely soft. It just really is. It's trading extremely, weak, despite the rally. I mean, even overnight, we've seen a rally in the NASDAQ. The NASDAQ's bounced back, but Aussie could barely move. Can barely even muster a move. And same with the Kiwi. So I'm gonna redraw the Kiwi flag pattern, but it'll look something like this. And I think we just have to be looking at 69.40. Like if you own the Aussie and Kiwi and you're watching the DAX hit all-time highs, you're watching, the S&P is 35 points from 4,000. The Dow is at all-time highs, and you're long Aussie and Kiwi dollars, you're probably you're probably more than a little concerned. You're like, wow, I cannot believe that these currencies cannot get out of their own way. And the biggest risk, as you guys know, is if stocks actually do take a turn lower. Let's say that everybody is worried about the Biden plan and the possible taxation that's coming, and you see equities come down. I mean, I would think that the Aussie and the Kiwi just absolutely crushed. So look at the Kiwi here. We could barely even muster up a 24% retracement. Barely. I'm not saying that we can't make it to 70.60, but I'm going to write down 70.30 is important right now. And this is I'm going to flip it to bearish just because of the lack of, response in these currencies. The dollar Canadian's stronger GDP numbers. We are, seeing a rally in the NASDAQ. We're still trying to hold above 120, above 126, which, obviously we slumped just, below that today. I was looking at this as a possible channel. We might slip back to this broken trend line. which would come in at 125, basically 125.60. You can see a lot of like spike high, spike low. I'm going to actually write down 125.60 there as being support today. And then resistance is 126. I mean, we went as high yesterday as 126.50. So we went as to 46. So I'm going to keep it in bullish. I know we've come off the highs, but I think while we're above this broken trend line, we have to be on, we have to be bullish. Yes, it's come down a little bit today. I get that. But the reason why I think it's come down a little bit today is because it's end of month, end of quarter. That's it. Dollar Swiss still strong, annoyingly strong. I mean, if you're, I have no position now, but man, I could only imagine if you're short the dollar Swiss right now, you're probably extremely frustrated. 94.75 is resistance. It's the next big resistance. And that is the longer term 618 retracement. So you can see it here, 618 retracement. And matter of fact, let me try something else. I know we were in between fibs before, so that's why I'm redrawing here. Well, a longer term 50% retracement comes in right here. Crude oil is starting to break down, by the way. Anyway, and that comes in at 95 cents. So I think there's going to be a lot of resistance up there. I'm going to actually write that down. This is bullish. Support. So, I mean, we obviously can't even get below 94 cents now. So let's just write that down. All right. US dollar, Norwegian krona. I sent out some analysis this morning. I mean, basically 618 retracement right here, trend line resistance right here. It's at 850. Let's call it 856. And 618 retracement comes in at 850. That's holding for now. Range bound. Dollar Mex. So the dollar Mexican peso, we're at channel support. I am a little worried about the dollar Mexican peso here. I know it's end of month, end of quarter. So I'm trying not to panic with the dollar Mexican peso and just start exiting here and taking it off. The problem with the peso is what I said yesterday. I think there's a lot of end of month, end of quarter flows that's driving the dollar mex right now. And it was trading heavy yesterday. And that was my concern yesterday. And it is still my concern today. So, it's like, I hate to pull it off right at the end of quarter, but at the same time, it is trading heavy. So let's, I'm going to write down support as today being 2040. I mean, this is channel support, right? Resistance today is 2063. I mean, that's today's highs. It's range bound, but man, it has been trading really heavy the last couple of days. End of month, stocks moving higher, risk appetite stronger. I mean, it's just, yeah, it's tough. Dollar yen continuing to rally here. 110 should be support. Actually, 109.80 on any dip. Resistance. I mean, we have 111. Beyond that is channel resistance, which is 112. I mean, I don't want to write that down, but oops. Oops. I mean, it is it, right? I mean, all these yen pairs look super strong too. Dollar index. 92.90 should be support. You can see it right through here. All right. Let me just point it out. Right through here. Previous resistance. We got some spike lows around there. And, you know, we are challenging the underside of this broken trend line. You can see that right here, this pink line, magenta, whatever it is. Here, let me, right? Multi-year trend line. Oops. We're back at the underside of it right now. So I'm going to write down resistance as being 93.50, support being 92.90. I do think this is pretty important resistance just because of being the underside of this trend line. Let's look at gold. Well, actually, I'll just look at the S&P right now. So here's the S&P. You know, I still don't know why we can't challenge 4,000 and 40.30 while we're above this 39.40. So numbers are still the same. 39.40. While we're above that, we stay bullish. 4,000, then 4,000. Was it 4,040? No, 4,030. It's the 127% extension. So okay, so here is now this is interesting. So gold's holding these lows at 1677. So I'm going to have to write that down. Resistance today. Now remember we're end of month, end of quarter. So we could spike all the way back up towards, I mean, I'm gonna write down 1705, which is this previous 4-hour support right here. I do still think it's bearish. We're just holding that support right now. Silver, we might have made a false breakdown below here, but I'm not gonna. Actually, I'm not gonna do that because, whoops, this horizontal support could actually be down here. I happen to have that spike low marked off. But this horizontal support down here might be more significant, which is 23.50. I'll write down resistance at 24. You can see these lows here, that low there. This comes in around 24.80. Whoops. $23.50. I'd like to see a daily close below 24 before I mark it up as bearish, but in Bitcoin. So Bitcoin saw a little bit of selling as the high was 59,816, basically 60,000. And then we slipped, 3,000 points. So if you guys are, you guys know I've been writing down 60,000 and 50,000. This trend line though is going to come in now around 53,000. So I'm going to write down both. So 50K, 53K, and then 60K. And I'm going to keep it in bullish while we're above the 50,000 level, but just keep an eye on it. All right, guys, there's your bias chart. It's finished. And I'm going to pass it over to Steve and Stelios. I have a feeling that the daily roundup is going to be a little bit more of an exciting webinar. I think we'll have some, oh my God, the Dow's just ripping, NASDAQ's ripping, S&P's ripping. Oh, there we go. Ripping them. Rip and grip, guys. So
different day, same markets.
Yep.
I like that.
Man, I'm just I don't. It's like, why bother? Why bother? Just go long and just stay long. Anyway, it's crazy. I look at it every day and think, man.
I guess the question we need to ask ourselves is, what do we think needs to happen for equities to go lower? It's an honest question.
I don't know. But the last time I felt this way, Stelios, was 2001.
Yeah.
Or 2000. It was the same dynamics, different asset classes, but same thing, right?
Yeah, this time there is no difference between asset classes. Just everything is up, goes up.
I wasn't as focused on what commodities were doing at that time. I was really just trading individual stocks. And we all were scratching our heads at that point too, going, wow, this all doesn't make sense, but it's happening. Didn't matter at the moment. It's just all happening. Yep. But as Stelios said, what does it take to stop the markets right now? I don't know.
A lot higher yields. That's I think
yes.
What's going to do it.
Yeah, maybe that is it. Anyway, well, guys, I'm gonna leave it to you. And like I said, I think the roundup will be a little bit more exciting today. So
let's hope so.
As we get into quarter end.
Yep.
All right.
Thank you, Blake.
Thank you, mate.
All right, guys. Have a great one. Thank you, everybody.
You do.
Thanks. One thing we didn't mention on FA.C.E was that we did have some data today. Might as well go through it. We had UK GDP, the final revision to Q4. 1.3% quarter on quarter versus 1% estimated. But, seeing the last few quarters, the way the numbers are fluctuating, 0.3% is not going to do anything.
Yeah, true.
But worth mentioning, obviously. And German unemployment came in a little bit better than expected. And Eurozone CPI 1.3%, exactly as expected. There is, we're seeing CPI everywhere elevated due to oil and associated factors, but still way below their target. And ECB's Lagarde today effectively said, look, we're not going to step off the accelerator. We're going to do everything we can. And she did say to keep yields low. She didn't say, the economy, the unemployment, this, that. No, we want to do anything we can to keep yields low. Great. That's the mandate.
At least it's honest.
That's the mandate.
Yeah.
So that's what we had, and really, I'm looking at markets, and nothing stands out today to me. And obviously, we have a little bit of a rip again as the markets open in the U.S. equity markets.
What a surprise!
Yep, the same. And we have so many. I think we have so many currency pairs which are kind of near levels which can be very important, like the Aussie that Blake was showing as well. I know you look at and I look at Norway as well, and there's a big level in the 860s something in dollar Norway.
865, 868, yeah.
It tried it a couple of times. Yep, it tried a couple of times. It's snapped back.
Yeah, so far the Norwegian Krona doesn't seem to really,
Yep.
buy the overall buoyancy of the dollar. I mean, if somebody was looking at this chart, actually we've been drifting lower during the past 4 days, also to be exact. So
yes,
we're back within the middle of this triangle or range, and depends on how you want to draw the trend line resistance. And if I had to look at this chart alone, I would say the chances are higher for a continuation lower.
Yeah, it's a very nice consolidation. Very nice, very orderly. Yeah, you don't want anything better looking than that. Obviously,
RSI has reset to neutral levels after being oversold. I mean,
the best thing you can see is when the RSI goes from an extreme level to back to neutral and price is done nothing. It's perfect. So,
which is exactly what we have here.
Yeah, I think this is going to be moved by risk assets, by equities. This pair is only going to go higher.
In any case, it shows that the NOK is a better destination than other currencies. For example, let's compare it to the SEK. Look at the two charts, right? I mean, there is an obvious difference here, right?
Yeah.
Or even the CAD, right, which is, making an attempt to break out, or the Aussie, or the Kiwi. So the NOK seems to be, doing very, very nicely against the vast majority of currencies. And I don't think it's by accident.
Yeah, there's good reason for that. We've talked about this so many times in the past. Yeah. As I've said before, I had a good run. I'm completely out of it now because I think that there's such a big, not big, but rising probability of some kind of correction in risk, and that's why we know that the NOK is one of the currencies that is going to fly. I mean, dollar Norway is going to fly higher if we get a decent sell-off.
Yeah. It is very likely at some point.
We probably won't. Look at the Nasdaq. Nasdaq's almost up 1% again today. It's like unstoppable.
I showed the Nasdaq previously. I just didn't want to interrupt you. I think it's an interesting chart. Let me show you why. Somebody mentioned the ZAR. That's why I just had a look at it. This is why. Here's the Nasdaq. So, we are at resistance as we speak. And to be frank, the latest consolidation here looks corrective. So it looks very likely to me that we're going to be breaking through that and targeting once again 13,500 next. So Nasdaq looks rather bullish, if you ask me. So yeah, I think today we're probably breaking through this channel if things go like they seem to be going as we speak, and higher we go. Here is the FANG index as well, which also seems to be going through a consolidation, but definitely doesn't look something bearish has happened here. I mean, just a corrective consolidation. This looks also like it probably wants to break higher towards like 1400, I would assume. So yeah, whatever you look, whenever you look around, I mean, despite logic and fundamentals, saying otherwise, you can't really justify being short risk, right?
Yep, I agree 100%.
Yeah.
I just cannot short anything at the moment.
No reason to fight the trend at the moment. I mean, there is no technical signal that says, yep, we've topped out and it's time to look in the other direction, at least temporarily. So in my opinion, don't fight it, because you can end up losing quite a lot of money. The market has proven over the past 12 years that it can be a lot more stubborn than you can actually afford. So, yeah. In any case, having to do with FX, honestly speaking, we haven't really seen anything, right? I mean, the past few days haven't given us something new in direction.
By the way, Chicago PMI a lot stronger than expected. 66.
66.3.
Yeah. Sorry, carry on.
Yeah. The previous one was 59.5, right?
Yes, and it was expected 60 point something. So
Yeah.
big beat.
Yeah. So yeah, the dollar seems to be somewhat under pressure, which is to be expected given the buoyancy in risk assets. We've said that if the dollar rally wants to actually have some legs, it's not going to be easy for that to happen while risk assets remain well bid. So I expect that the move higher is going to be if it can actually resume, it will be very, very orderly and slow as long as risk assets remain well bid. If the dollar wants to actually propel higher from here, some risk of conditions are going to be absolutely needed. CAD yen breaking out. Let's have a look. Yeah, here it is. Breaking out through this channel. Quite an important development. Opens up the door for a move towards 89.5 here. So the CAD remains well bid. We can see it also in the USD CAD. The USD CAD seems to be trying to turn lower. We've already retraced yesterday's range and a little bit more. Actually, we've now retraced the last couple of days' range. Let's see. I mean, it makes sense. Commodity currencies are well bid, as the rest of risk assets are well bid. Nothing new in the euro, nothing new in the pound. USD yen, we mentioned it before, but I didn't have the charts in face. We've been following this template that I had envisioned perfectly. We're now reaching the next zone of interest having to do with resistance. As you see, it extends from here, which is the 88.6% fib to 1130, more or less. So I think it's worth paying attention to this area. We might see some type of a rejection and a pullback in USD yen. Obviously, not easy for that to happen as long as yields and risk assets remain well bid. But my thesis about yields hasn't changed either. I mean, I see a lot of divergences here. Momentum is clearly stalling. This looks to me like an ascending wedge. Yesterday we spiked higher to new highs, to new, what was it? When was the last time we were up there? January of 2020. So it's what, like 15, 16 month highs. Yeah, 15-month highs, let's say. So, we spiked to 15-month highs, but then reversed to actually close lower on the day. And we left behind this shooting star. So, I think we need to pay attention to this chart. Who knows? I mean, yesterday might be a day of significance, technically speaking. But of course, let's see what happens today, because so far I don't see any real headwinds for yields to move higher, at least for the time being. Unless the market thinks of the obvious. I mean, it's really funny because the market has started getting like happy and all about the new spending bill, in essence, the infrastructure spending bill. For me, the most bullish development in that is not the infrastructure spending itself, I believe that net it's going to be negative because you tax more corporations and individuals in essence, for the government to do stuff, which, whenever a government does anything, a lot of money is being lost on the way. It's like having a rusted old machine that, whenever it's working, it has to consume so much energy because of the extra friction, that the output is a lot less than the inputs combined. So but the bullish thing about it, in my opinion, is that once they vote that as well, the Fed is going to have a lot of buying to do. I mean, so many trillions and trillions of debt. Who do you think is going to absorb that? The Fed will, if not all of it. I mean, the vast majority of it, and that is going to be a very good excuse to push yields lower once again. I mean, they'll be doing so much buying, and they're going to be the only ones almost doing the buying, that they might be able to suppress yields once again quite effectively, at least temporarily, right? So yeah, that is going to definitely help the perception of the markets, about future expectations. I mean, if they manage to suppress the yields once again. So, let's see how that works out. Now, having to do with the metals, the key level I'm still watching. By the way, we've so far yesterday and today, what we've done is we've perfectly backtested the lows there, right? Also lows there, there. So as you see, this 1670 area is important, but if you watch the channel trend line support, it clearly passes just a little bit lower. It's like $10 lower. So, we are getting very, very close to important support. Now, very frequently the markets tend to overshoot these type of formations. So I wouldn't be surprised, to see somewhat of a move lower from that. But I do expect that gold is going to be moving higher sooner rather than later. Here is silver as well, testing the 78.6% fib, 22.5, as I've said, key area of support. Silver's chart is not as clear cut as the one in we see in gold, right? So this is something that is obvious. Now look at Palladium. Had a nasty day to close to start the week, and doing its best to retrace. I still think this might be just a bull flag here. And here's platinum, which, as you see, despite gold and silver being under pressure, platinum is doing just fine and is threatening with a bullish breakout. Now, we talked about copper previously, adding here nickel. Now, I don't know what kind of a consolidation this is, but my thesis remains that whatever it is doesn't look that good, right? So I would expect that nickel at least should have more weakness based on this and the impulsive nature of the move lower. Crude. Now, yesterday quite a negative day. Specifically, I showed yesterday the 4-hour view. Here it is. And nothing has really changed. I mean, this is likely some type of a consolidation that is going to, more likely than not, produce another leg lower before we can see a continuation higher, right? Now, I don't know for how long crude is going to manage to remain uncoupled from risk assets. Many times, crude leads a turn lower, but, for the time being, it's not that we're seeing something like that. Just saying. And natural gas, where is it? There it is. Natural gas, here it is. Nothing has really changed here either. As long as we stay, above this channel, there is a very good bullish case to be made. 200 DMA has managed to hold on so many occasions, right? On a daily closing basis, we haven't managed to break below it. So I think you should, seriously respect that as support as long as we trade above it. Currently passing from 250. Okay. Copper, we did mention in the previous part of the show. Nothing has changed here. It's, as I've said, it's either a triangle or a channel, right? No idea what yet, but definitely looks very healthy, right? I think it's just working out the very overbought conditions, and it's a matter of time before it continues higher. But within this corrective formation, it is not unlikely to see a lower low before headed higher, right? So, we either go straight up from here if we break through this trend line resistance, or if we break through this intermittent trend line support, then we probably have a lower low to post before we continue higher. But in any case, medium to long term, copper looks, extremely healthy. So, fade copper strength at your own peril. I think, you shouldn't be trying to trade the other way. How to trade wood, lumber, you mean? There are lumber futures. Yeah, there are lumber futures. I've never traded them, to be frank. Stelio, do you know the?
I don't. I've never traded them, but I'm guessing that just like with things like oil, you get contango and the backwardation, and so you have to be careful about the term structure of the prices.
Very correct.
But I've never traded it. Never.
Yeah, I don't know. If you can find the ticker, tell me. It's definitely there are definitely lumber futures. Yes. So if somebody knows the ticker, just give it to me and we'll have a look at them. Never traded these type of commodities, to be honest. I don't know why. I mean, I tend to read them well on the chart, but I'm looking at so many markets. I just haven't ever gotten into participating in those markets. I mean, I do the metals, I do FX, I do indices, I do bonds, but was never really into these other type of commodities like sugar, coffee, lumber, pork, all that, grains. I've never got into trading them. Okay, I think more or less let's also have a look at cryptos once again. So I just want to reiterate my thesis here with Bitcoin. I think there is a good chance for a higher high, which is going to come inevitably, as you see here, with more RSI divergence, right? So I would be very, very careful with cryptos because I think that another move higher might be the last one before we see a deep correction. Now, Ethereum is right at resistance. As you see, different structure in Ethereum than in Bitcoin. In one, we have a symmetrical triangle. This is Ethereum. And in the other one, we have what seems like an ascending wedge. So, two scenarios here. I mean, we might see Ethereum doing some catching up. Or alternatively, we might see Bitcoin produce a higher high without Ethereum following and producing a higher high, which is going to be a very nice divergent signal between the two markets, right? That are in general very well correlated to each other. So keep in mind that that might be important. So, I wouldn't be surprised to see more strength in the short term, but I would be looking for a deeper correction afterwards before we can discuss about continuing the uptrend. Hi guys, can you look at GM, HPQ, and DKNG? Yeah, absolutely. Let's take them one by one. First one, GM. Let's see what GM is doing. Ooh. It's doing nothing wrong. I can tell you that much. It's doing nothing wrong. Look at this massive move, right? From 2020 to today, I mean, the price has almost quadrupled. Why? I mean, has something like substantial happened to the company?
I think they've rolled out a couple of electric vehicles and the usual stuff, but not that I know. Not that I know of.
But how can the market at the same time be pricing that Tesla is going to produce every single electrical vehicle sold for the next billion years to justify their valuation and be enthusiastic about other companies creating electrical cars?
The market's partly right. It's pricing that the company is going to be creating a big chunk of and selling a big chunk of cars going into the future, electric cars, but it's going to be Volkswagen, not Tesla.
Yeah, no disagreement there. Look, this is, the epitome of a parabolic move, right? You can see here. Not only we've been going higher, but the rate with which we've been increasing is increasing as well, which means that this move is unsustainable. And RSI tells us more or less the same story. You can see it here. Actually, RSI has been diverging since before that a little bit. There you go. You see? So, focusing shorter term, I wouldn't say it's impossible to see a higher high, but I do think that being long, from what I see here, is a very dangerous proposition. I mean, this massive parabolic move is in need of some deeper corrective pullback. So if you're asking me, for the time being, it looks very bullish, but I think buying here, it makes zero sense. I think the risks are tilted to the downside. HPQ was the next request. HPQ. Hewlett Packard as well.
Pretty much everything's the same, right? Look at that.
Yeah, big. Corrective move lower. Clean breakout. I mean, this looks so much like the S&P if you think about it. I mean, the last stages of it. So, divergences, so on and so forth, but hasn't done anything wrong yet. But, can you actually buy it up here? I mean, it makes no sense, right? You can see why. Also parabolic move. I mean, another chart that what I would tell you is that, you shouldn't be fading it because there is nothing wrong happening here. You have the epitome of an uptrend sequence, huge sequence of higher lows, undoubtedly. But look at all the divergences and how overbought we are. So, I mean, you can't be buying these markets unless they pull back and give some better prices to enter. And prices at the moment are anything but attractive, right? DKNG.
Dunkin' Donuts. Oh no,
Yeah.
DraftKings. Yeah.
What is this? Which I assume from what I see here that it was rather recently IPO'd.
Is this like a sports betting thing? If I'm not mistaken, hold on. Yeah, it's sports betting. Yeah, sports betting in the US. In the US, right? Yeah.
Yeah. We had a lot of RSI divergence over there, and it seems to have played out. We've been moving lower. I would pay attention to this trend line here. This one. Trend line support. Above it, it's bullish. There's no question about it. Let's also see. The last leg higher. Yeah, I would say, look towards like 50% FABE or so. Definitely remains in an uptrend. There's no question about it. This trend line support defines a trend, as simple as that. And the trend is higher, despite the last couple of weeks of a pullback we've had. So the closer we get to this trend line, I think the better the risk reward to buying it. Okay, so let me see. PHPT. Listen, it's not going to look different to Palladium, right? It does look a little bit different though, because this one hasn't broken out yet. So there you go. There you go. Moment of truth, sooner rather than later, right? We're coiling in a symmetrical triangle. Highest probability we're going to break higher. So keep that in mind. Let me see. CABK. Let's see. CaixaBank. Okay, that's the Spanish one, right, Celio?
Yes, sir.
Yeah, we've had a recovery, but nothing really enthusiastic. I mean, why would you want to be buying relative weakness? I mean, look at so many charts of companies that we've seen so far, and they're all pushing like all-time highs. Look at this. European banks, especially, are junk paper. In my opinion, stay away from them. Now, this move can extend towards 3, as you see. But in all honesty, I wouldn't be buying even for the short-term European banks. I mean, they're completely broken. That's what I think about it. Vlad. Okay, guys.
Great. Thank you, Steve. That was really good.
Okay. Have a wonderful rest of the day.
Thank you, everybody.
Oh, Guild. Wait, we had one more request. Ooh, nasty.
Jesus, what is that?
Gilat satellite networks. Somebody blew up their satellites, as it seems. The only bullish case scenario I see here is, this. Right? I mean, if this holds, there is the potential for a dead cat bounce. But if you're asking me, I would be very scared with this chart. Vertical up, vertical down, looks to me like a penny stock. I have no idea, how good the company is or whatever, but I would be very careful. And we break, below this trend line support, then, next stop is like the 200 DMA at 760. So yeah, looks like a casino stock to me, if you're asking me. Not literally a stock of a casino company. I meant, the way it moves, reminds me of a roulette more than, an actual, investment thesis. GME, last one for today. GME, what the hell? This GameStop, I mean, look at this volatility. Last time we had a look at it. Yeah, that's why we don't have any GME. Here it is. Yeah, you see, I caught it perfectly. Last time we had a look at it, we were there. And I said that, in my opinion, you should sell this rebound. And we did indeed break down from there. So, nothing has really changed. I mean, in my opinion, this was a rebound to be sold. And I think the same thing applies here. I mean, this inevitably will fail. I don't think GME is going to be doing anything. I think GME is headed back towards double digits for sure, most likely single digits, and extremely likely very low single digits. So we're still seeing remnants of the stupid volatility of brainless people, and it's still like a vehicle of casino type of speculation. But I don't think this can survive much longer up here. I mean, I think we're headed lower, significantly lower. Okay, guys and gals.
Thank you, Steve. Thank you,
Bye-bye.
everybody. Thanks.
Bye, Stel.
Bye-bye.